Hey everybody, Justin Schlegel with RHP Real Estate and Team Schlegel. This is your September 2022 Phoenix Real Estate Report. We are in the middle of a correction, not a crash. Or so I hope. But no, seriously, there are some similarities when you think back 15 years ago before the Great Recession, but there's also some very different foundational pillars that our market is based upon now that were not in place then. So I really do believe this is a correction, not a crash. So let's take a look at some different factors here. Pricing. Yeah, we've seen pricing come down a little bit. On average, around 10%, but it depends on the type of home, the area of the home, the condition of the home, and all those kinds of things. But we have seen pricing relax a little bit. But that's okay because the rate that we were going, not sustainable forever. And for the most part, everybody's sitting on a ton of equity still over the last few years run up. So rates, interest rates, that's a big key right here to affordability. So interest rates have been up and down and a bit of a roller coaster. And last week, they actually moved up again when the new inflation report numbers came out. So that's something to watch going forward. But we are seeing interest rates, upwards over 6% at times, which historically is a great rate, but we didn't have the higher prices to go along with that. So something to watch for sure. There are some creative options when it comes to buying down the interest rate, whether it be for a short term or for the long term. There's different incentives out there from sellers and from builders. So don't let interest rates scare you completely before we have a conversation about that. Let's talk about demand. So investor demand has pulled back because the market is volatile and there's, stock market concerns and things like that. And so the investors, there's not really, a way for the mom and pops to cash flow super well when you have higher interest rates. And so investors have kind of pulled back, but there is very much a pent up demand from people that are in the prime home buying ages that are having to settle for apartments or some of the build to rent communities and things like that. So when interest rates end up coming down at some point, which we believe they will, and pricing already being more attractive than it was a few months ago, we feel like there will be a heavy demand from new buyers entering the marketplace once again. External. So I alluded to the stock market. That ties in more to the luxury market, but everybody that has a 401k or any sort of retirement portfolio, they've felt that volatility. So that's one external factor. Another is politically. We're coming up on the midterm election season, and for many, they kind of take a pause, wait and see effect with that. So, those are a couple factors that are outside of our control that are impacting real estate as well. So long story short, affordability is key. We are still seeing buyers make offers. We are still seeing sellers sell homes. It's just a more traditional way with more negotiation. And quite frankly, that's kind of fun for us. And it gives us the ability to really show our talents and what we can do. At the same time, it's a difficult market to predict. So, we're not always going to be right in that assessment, but, we do have some good information to base our opinions on. So we are seeing creativity when it comes to the financing, like I had mentioned, even adjustable rate mortgages, which I know scared people a lot of times in the past, but they're different today. And if with the right mindset and outlook, they can still be successful. So consumer confidence, we need to get that going in the right direction for us to have a healthy market, a healthy economy, and everything else. So if you have any questions about real estate, that's what we do day in and day out, and we'd love to help you too. So please give us a call. The information is below. Thank you for watching and have a great day.